Can you hear me now? Can you hear me now? Yeah.
Yes, I can hear you.
All right. So today is about trading styles. The thing is that not all traders trade the same way. And over time, in your learning process, you get to discover what your style is. Yeah. Some hold trades for minutes, some hours, some days, even weeks. All right. So if I'll ask, why do you think that is? Why do you think some traders do that? Any idea? Any idea? Okay, well, to save us time, that's basically how they approach the market. All right, that's basically how they approach the market. How long a trader holds the market depends on their strategy. All right. So today we'll be focusing on today's focus. Um, focus intra trading, intraday trading, to intraday techniques, swing, swing trading, or swing techniques. Right? So we'll be going through all of this. All right. So first off, what is intraday trading? Yeah. In fact, I believe you must have heard of scalping. You must have heard of day trading. Yeah. Intraday trading simply means the style of trading that involves you opening and closing open and closing a trade within a day. Yeah. If you're a day trader, yeah, you don't hold your trade over the weekend. All right. No trade is carried over overnight. No trade, not a single trade. Yeah. They make sure that before they sleep or before the day is over, they have no active trade on. Okay. This is what these guys are. Right. Now, one of the key characteristics of day trading is that, okay, like I said earlier, of course, as the name is, trade lasts from within minutes to hours. Within minutes to hours. Okay. And sometimes it requires active monitoring here. You need to always check, since it's a trade that lasts in minutes, you need to always be there. Yeah. You need active monitoring, yeah, to see how the market is reacting. Sometimes if it doesn't really need limit orders, you can just be actively there, take your trade and monitor it to see how it goes. All right. And another thing is that your focus you don't work with for 4 hours time frame that much. Your focus is either 1 hour, 30 minutes, 15, and 5 minutes. All right. That's for intraday trading. All right. And some of the advantages is that, since trades tend to end in minutes, there are quick profits. Understand? Because within 5 minutes, 10 minutes, 15 minutes, your trade has cleared. Quick profits, right? No overnight risk. So you save yourself from the stress of thinking about your trade while sleeping. Oh, will I hit stop loss? Will I hit TP? How is my trade going? You save yourself from that stress, right? Another thing we can look at is there are so many opportunities, all right? There are so many opportunities in a day. So many opportunities in a day. Right? So if you're an active day trader, you're gonna see loads and loads of opportunities. These are the advantages. And of course, anything that has pros has cons as well. Anything that has advantages has disadvantages as well. Right? Some of these advantages, just take note and know all of this. Some of the disadvantages is that, like I said earlier, it requires your constant attention. Right? You'll be tempted to always check the charts. Oh, let me see. Let me see how it's going. Oh, let me see. Let me see. Let me see. All right. It's emotionally demanding, especially for scalpers. Especially for scalpers, it's emotionally demanding. Seeing, let's say you took a buy, or let's say you took a sell at this particular point, seeing the market go in profit and um, come back to a drawdown. That's a lot of emotional um investment there, right? And there's also risk of over trading. Yeah, for day trading, basically. There's also a risk of over trading, right? Where you get to, and of course, when I mean over trading, I mean let's say you got stopped out here. It might be tempting since emotions are highly involved, right? You might want to just, oh, let me take one, let me take one, let me see how the market might go my way. All right. So in as much as there are the advantages of the trading style, right? There are also disadvantages. So just the main thing is after today's training, yeah, you get to know where you're on or which you're more comfortable with, right? There are those that are so comfortable being swing traders. There are those that are more comfortable having their trade last within minutes and they are done with it, right? And they are done with it. So when we talk about the techniques, what do we mean, right? Techniques of um, day trading. So, and the second part now, the techniques. So, like, let's look at this chart. Mm, trying to see a perfect. Okay, this is a resistance. Yeah. Some of the techniques of trading this day trade, some of the techniques here, break and retest. All right, so let me break and retest. Let me use this one instead. This is a resistance. If you mark this thing down, market came, broke a resistance, it became a support, it continued buying. All right, you can see how clear it is. All right, support resistance. That's basically some of the techniques used in trading for day traders. Yeah. Then of course we have the FVG, respect of the other blocks. All right. Now, if it's for a sell, right? If the market, let me see if I can get, okay, look like this over here. If you're following the courses here, I believe you must have gotten to Zonda, the course Zonda strategy. This is basically Zonda break and retest, right? This is basically Zonda. Let me get. So this is a support, right? The market came respected here, two, three, four. Then what happened? It broke. Now this will make more sense on a lower time frame. So let me go to like let's say a 1 minute time frame to see how that zone actually is. But that 5 minutes is not, that 15 minutes is not giving me exactly what I want. Oh man, this is foul. Okay, yeah, okay. This is a support, right? Series of supports. The market did what? Broke, retested, of course, and start selling. This is not like the perfect, but I believe it would make sense. Let me see if I can get a perfect. Once you have a break and retest is not so perfect, right? But once you see the perfect one, take advantage of it. This one, so uh, a nice resistance, right? Market broke, touched, and so the idea is if the market breaks a support, right? You wait for a retest, it keeps on buying. If the market breaks a resistance, the market breaks, okay, what am I saying? If the market breaks a support, wait for a test, it will keep selling. If the market breaks a resistance, which is something we have here, wait for the retest, it will keep on buying. All right. So these are some of the techniques used in trading. Yes. Then we also have, okay, I've talked about break and retest, right? Then another thing is session trading, right? This is a day trading. Yeah, you have to focus. There's a tendency to focus more on sessions, right? You know when New York stars, you know when London stars, you know how to trade the Asian range. There's always Asian session always starts by 1 a.m. our time, right? And there's always a surge. If you observe, there's always a surge in the market by 2 a.m. That's like what you are seeing here. There's also a surge. So you know how these openings affects the market, right? Same with waiting for New York Open and of course London Open, right? So these are things you focus on when trading. These are things you focus on. Yeah. When trading, these are the techniques basically. Yeah. If you want to call yourself a day trader, you need to know all of this. Technically, a swing trader don't even really care about all of this. Yeah, he just sees a setup on the daily time frame or a weekly time frame. He takes it and leaves, right? So, like, like one of the strategies I use here for my New York Open is now most of my, like personally, I identify as a day trader, right? I don't swing. I don't swing. Yes, I think I've said this before. I'm looking for, all right. And just so you know, right? Um, the time has changed. Mhm. Before now, just let me tell you, before now, New York was -5. So before now, like from last week here, New York session starts by 3:30. But from Sunday, the time zone for New York changed. It came down to -4. All right. So now New York time starts by 2:30 instead of 3:30. Right. So another thing to look out for is by 29th of this same month, right? London will increase to +1. That means instead of London opening, like what it means is that we'll have same time with London right now. Yeah. So instead of opening by 9 a.m. that it does now from 29th March, it will start opening by 8 a.m. All right. So these are things you need to know as a day trader. You know when the times are changing. Yeah. So you don't go sticking to 3:30 while the opening time has changed to 2:30. Or you don't go sticking to 2:30 while the time has changed to 3:30. All right. So I just need to let you know on that. Or need to let you in on that. So yesterday is 3:30, right? Markets respected, you know, there are techniques in trading all of this, right? So without further ado, let's go over to swing trading, right? Now, what is swing trading? So you can guess swing trading might be opposite of what day trading is, right? Well, it simply means holding trades for several days, sometimes weeks. If you meet the crazier people, they hold trades for like months. Yeah. Now, the main aim of a swing trader is to capture bigger market moves. Now, some might be saying, oh, gold dropped crazily last week, right? But let me see if I can get on that. But if a day trader looks at it, what he can see is that gold is still on a buy move, right? In fact, a day trader might actually go in here for a buy and the TP might be around here. He's patiently waiting, doesn't really care, all right? So I mean a swing trader. He doesn't really care. Whatever we are struggling with during the day, no, he doesn't mind. Right? He's moving, his TP is around here. He doesn't really care. Right? So, like I said, swing trading. Sorry about that. Now, key characteristics here of a swing trader or of swing trade is that they focus more on the 4 hours time frame. They have no business with lower time frames. Yeah. They focus more on 4 hours time frame. 4 hour time frame, they get to see their setup. They take it and they are good, right? They get to see their setup. In here lies loads of opportunities for a day trader. But for a swing trader, he's simply waiting for one clear opportunity to take a trade and they are gone. All right. And because they are working from a higher time frame, they are not exposed to loads of opportunities. All right. They are not exposed to loads of opportunities. And the last most important thing about swing trading is that it requires sheer, it requires a crazy amount of patience, right? It might take you days or weeks for trade to hit your entry. Now, sometimes the painful part is that you might wait for a trade for like 1 week and boom, you hit your stop loss in a day, sometimes minutes. It can be crazy, but it's still part of the game, right? So one thing about it is that it requires patience. And if you don't have that, then swing trading is not for you. Now, when we look at the advantages of swing trading is that it doesn't require you glued to your screen, right? You're not glued to your screen for any freaking reason. All you need to do is to spot your entry. Boom. Let's say you're expecting to sell from here. You're expecting to buy from. If I'm a swing trader here, I'll be looking at buying around five 5115 because I see an imbalance here, right? My stop loss should be around here. I'll be targeting, I'll be targeting this high or this crazy high here. So all I need is to set my buy limit right here, set my SL, boom, and I leave the market. I don't really care, right? So those are the advantages. Then, of course, larger profits. You cannot compare profits you make from a single trade as a day trader to the profits you make on a swing trade. That's why you see if you're very active on X and some of these traders, some big wins you see. Yeah. As swing traders holding trades for like weeks. Imagine buying this like imagine buying gold, yeah, on the 2nd of February. That's like right here, 441. From this very point to where gold is right now. From this very point to where gold is, because let's just ignore this. Or let's say it's ready to take your profits at this point, right? This is 1000 pips, right? So with 0.01 lot size, the least profit you are making from this trade is $1,000. With zero point 0.1 is 10,000. With one lot size is 100K. Now imagine those that are trading with like 10 lot size, 50 lot size on gold. That is money, all right? So that's why you can't actually compare profits these guys make on one single trade. The only thing is that it takes time. Imagine 2nd February to today. That's like more than a month. Or okay, this uh okay, if it's actually a pure month, 2nd February to what is this 2nd February to 2nd March. So one full month to make roughly $1,000 with your 0.01 lot size. Isn't that worth it? All right. So that is it. Right? That's one good thing. The profits made are large. And of course, since you are not so glued to the screen, it requires less um emotional what's it called? It requires less emotional pressure. Yeah. Of course, the advantage is that overnight risk. You know how the gaps that do happen overnight, that's small disadvantages. You can have your trade, boom, there's a large gap, you get taken out on your trade. Yeah. And of course, since you're aiming for higher profits, your stop loss are large as well. Crazy, crazy stop loss. Oh man. Then of course the results are slower. Okay, the results are slower. So that's results are crazy, crazy slower. All right. So that's part of it. Then going over to the techniques, right? Going over to the techniques, they rely, see, a swing trader that tells you that he doesn't rely on trend is not a swing trader, yeah? We need to watch the person to actually know what's wrong with him, right? Swing traders here rely solely on trends because that's their game. Yeah, this is a 4 hours time frame. You cannot be looking at this chart and you're telling me you are looking for sales. What are you selling? All you can say here, yeah, you're waiting for the market to drop to your entry and boom, you're good. Then another thing they rely on here is moving averages. Yeah, so let me get a moving average indicator to show you what I mean. We have the EMA, we have the SMA, right? We have the exponential moving average, right? Um, and no, you can always edit it, right? And most of the moving average they use is the 200 EMA, right? To cover more ground, 200 EMA. And of course, see how it makes sense now. And what does EMA? EMA is simply if the market is above your EMA, just know you're on a clear buy trend. But when it crosses below, you should start thinking twice, yeah? Just the main thing is that if you see the market above your EMA, it's a buy move. And with this tells them that, okay, for the most part, gold is on an uptrend, right? For the most part, looking at this, it's an uptrend. So any swing trader should not be thinking of selling gold, right? If they're a swing trader with this EMA, yeah, they should just keep on taking their buys, waiting for good entries, taking their buys, right? You cannot say same for other pairs, right? We just focus on gold, right? Other pairs. So that's what it is, right? So I delete that. Another thing, of course, structures, highs and lows, right? Highs and lows. Apart from trend, another thing to look at is your highs and lows. Look at this is a swing low, swing high, swing low. Oh, no. Okay, low, high, low, high. I don't know how count this as a low, but let's say a low, high, low, right? So as you can see, I drew this trend line. I think I drew this trend line. I don't know when I drew it. This was like I think it should be last month, right? Good has been messing up, but what you can see that it hasn't actually broken this trend, telling you that okay, this guy is still bullish regardless. Yeah, there might be series of like right now the market is just ranging. So this is ranging just for a while before it breaks to continue buying. All right. So these things to actually consider, right? See your structure and see that it's in line. Okay. So there's also support and resistance when it comes to swing, right? There's also support and resistance. You buy at major support, just at just like let me see. Um okay, I'm trying to spot a good support area that can serve out. Okay, I think this is perfect. This is perfect, right? This area right here. Imagine waiting for your trade to get into this position. For this to be a support, for market to reject this area here on a 4 hours time frame, it means it's actually a very good support zone, right? So what happens? You wait for a trade here, and boom, you're in. So for what it's worth, you're already in profit. wherever your target is, right? So these are techniques of trading, the swing style of trading, right? Now, like I said, your trades will run for days, that's certainly. Then the last part is Fibonacci. I highlighted something for us on Fibonacci yesterday. Um, let me let me see. Okay, let's see. Let's just show something on Fibonacci. Yeah. This is the 4 hours time frame, right? Let's say in this particular chart, you're waiting for. This is so confusing, right? Okay, let's say this is the high and this is the low you're looking at. So last thing is Fibonacci retracement, right? Trading off. I talked about this yesterday. Trading off the 50% zone. Now, this should be like this. What am I doing? This for sales. Trading off the 50% zone, right? So you can also add the 61% as well. Right, there is that can also add it, right? So the point is within this range, after the market has come down to this area, within this range is actually a very good reversal point. Yeah, between 50% and 61%. Yeah, but the market tends to reverse around these areas. Yeah. So this can also guide you in your trading as a swing trader. So you can simply wait. Oh, I see this like a swing low or the market is trending downwards. Okay, I mark the last high to the last low. Yeah. I wait for the market around here. All I need is to place my entry. What's it called? Place my entry. Okay, I'm selling at this point. I'm perhaps taking my TP at the former low, have a healthy stop loss. See, this stop is like 448. This is like 448 points. All right, $448, as you can see like this now. 908. However, it is, you have the trade kept and you're ready to run with it. All right. So I needed to get a clear chart because that my code is quite messed up. All right. So those are the techniques here involved. And what we do in the course of this our training here is to break this thing down over time. So the essence of this is actually to know where you stand, know your style, right? To know your style and, of course, work with it. Then to wrap things up, okay, to wrap things up, um, there is no best trading style. Yeah, there is no best trading style that you see someone trade, leave trades for so long and they tend to win. It does not mean that it will work for you. All right. It does not mean that it will work for you as well. Right. The essence of this whole thing is for it to suit your personality, suit your day-to-day lifestyle. Yeah. Some persons swing are not for them. Some persons they prefer swing trading and they don't really have the time. Yeah. So if I'm to ask, yeah, based on what you've heard so far, which one do you think suits you? Yeah, I'm asking the house now. Swing or day trading? Just let me hear. Which one do you think suits you?
Day trading.
Day trading. Okay, okay. All right. Obiora, how about you? Kaima. Which one do you think suits you? I just want to hear, I want to get your feedback. Okay. Day traders everywhere. Okay, I see that. I see that. I see that. Okay, that's good. That's good. That's good. That's good. So if you okay, I've been on let me see if I can get let us do something before this call ends. Um to give us an assignment or sometimes some of these charts. And one thing, yeah, if whether swing or the if it's not clear, yeah, it's not clear, right? If you're not seeing any clear setup, just it's best you just leave it, right? It's best you just leave it. Okay, what am I seeing here? Mm, okay, I can see market breaking the support, sorry, breaking resistance, coming back to respect. So, well, without further ado, that is it, yeah? So main thing is understand your style. You might start as a day trader and transition into a swing trader. You might start as a swing trader, and over time, based on life involvements, yeah, you switch to a day trader. However, it is the essence of the whole thing is to stick to your rules, yeah, stick to your plans, and of course, make the best of it. All right. So, family, we've come to the end of the session for today. So, if there are any questions, you can ask. We have like 5 minutes left on the call. Any question? Any question? Okay. In the absence of no question, we call it a day. So, cheers and the best family. Have a great morning and a great day. Mm.